At the start of the new fiscal year, the balance carry forward program is run. It ensures that the balance on customer accounts is carried forward to the new fiscal year. The posting periods of the old fiscal year are then blocked and the special periods for closing entries are opened. After this, the following closing operations are carried out. Balance confirmations are sent and evaluated. Foreign currency documents are valuated. Value adjustments are carried out for overdue receivables. Accounts receivable are reclassified into short and long-term categories for the financial statement. The special periods can then be closed.
Balance confirmations, foreign currency valuations, and regroupings are carried out in the same way as in accounts payable. Therefore, we focus on how value adjustments are performed. The following options are available for creating value adjustments for receivables. You enter individual value adjustments or IVA as a special GL transaction E. You use program SAPF 107 additional valuations to carry out a flat rate individual value adjustment. Once you have determined the amount of the value adjustment, you adjust the flat rate value by making a manual GL account posting. The posting record is expense from flat rate value adjustment to value adjustment. Doubtful receivables are written off as an individual value adjustment or IVA during year-end closing. The special general ledger method is suitable for this procedure because the transaction is entered in the customer account and is also posted to a special GL account, individual value adjustments for receivables. Use the tax code that represents a tax rate of 0% for the posting. After you have ascertained that the debt is irrecoverable or that the receivable has been paid, the individual value adjustment is reversed. If the debt is irrecoverable, the receivable is cleared from the customer account and the amount is posted to the account for depreciation of receivables. The sales tax is adjusted in the posting.
You can use a valuation program to carry out value adjustments. The program functions like the dunning and payment program. Each valuation run is clearly identified by the run date and identification fields. You can specify how to execute the valuation by entering parameters for the valuation run. You can use the parameters of an existing valuation run as a template. These parameters include the valuation method, valuation area, and posting specifications. The valuation run analyzes the accounts and documents defined in the parameters and creates a valuation proposal. You can edit it if necessary. The valuations can be entered manually in the document at an earlier date, that is, individual value adjustment, determined using a value adjustment key contained in the customer master record. During the valuation, a certain percentage of the overdue amount is used. The number of days that the respective items are overdue is used as a basis for this percentage, which is a reserve for bad debt. Several valuation keys can be created for customers of varying credit strength. That way, overdue accounts receivable from weaker customers will be reduced more than those for stronger customers.
The last stage of the valuation process is the transfer. GL documents post the valuation and the valuation is also entered in the valuated documents so that the valuation can be traced at any time. Note, the valuations can be carried out in different ways if the financial statement is created using different sets of accounting standards. The differing results are then posted to separate accounts that are used in different financial statement versions. Note, the valuation run can also be used to discount open accounts receivable, which means they are valuated at their net present value. This is a requirement in some countries.